Breaking news: millions face an avoidable annual dread. The unexpected tax bill. It hits without warning, disrupting budgets, dreams, and peace of mind. A recent survey reveals nearly 60% of individuals feel overwhelmed by tax season. This isn't just about numbers, it's about the emotional toll, the feeling of losing control over your hard-earned money. But what if this shock isn't inevitable? What if you possess the power to transform this fear into confidence? Today, we pull back the curtain on how avoiding a surprise tax bill truly works, empowering you to reclaim your financial narrative. We uncover the proactive steps that shift you from reactive panic to strategic calm. Meet Sarah. A talented graphic designer, she embraced freelancing with passion. Then, April arrived. An unexpected tax bill landed, for figures higher than anticipated. Sarah felt a punch to the gut. How could this happen, she wondered, staring at the intimidating notice. It wasn't about wrongdoing, it was about misunderstanding the system. Her income soared, but her tax preparedness didn't keep pace. This shock isn't unique, it's a common story for many venturing into new financial territory. But Sarah's journey, like countless others, began with a moment of confusion that sparked a powerful desire for change, setting her on a path to financial mastery. The heart of the surprise tax bill problem lies in an expectation gap. Many assume taxes are a single, annual event, a one-time calculation at year-end. This perception, while common, is fundamentally flawed. For most, especially those with varied income sources or self-employment, taxes are an ongoing conversation. The disconnect between this reality and popular belief fuels anxiety. Experts confirm, understanding this continuous nature is the first step to bridging the gap. It transforms taxes from a looming deadline into a manageable process. This critical insight empowers individuals to build a proactive financial framework, avoiding future shocks. Let's bust a pervasive myth: taxes are only a once-a-year headache. This belief traps countless individuals in a cycle of 11th-hour panic. While filing occurs annually, tax obligations accrue continuously. For many, particularly freelancers, small business owners, and those with significant investment income, quarterly estimated payments are a legal requirement. Ignoring this reality leads directly to penalties and the dreaded surprise bill. Financial literacy demands we reframe this. Taxes are not a sprint, they are a marathon. Embracing this continuous rhythm cultivates financial discipline and foresight, paving the way for predictable financial health. The truth is empowering: taxes are a continuous financial dialogue. Every paycheck, every freelance invoice, every investment gain, each transaction impacts your tax liability. Smart financial management involves acknowledging this ongoing relationship with your earnings. It means setting aside funds regularly, tracking income, and estimating potential tax burdens throughout the year. This isn't about being an accountant, it's about basic financial awareness. By engaging in this dialogue, you gain foresight, transforming uncertainty into clarity. It allows you to make informed decisions, optimizing your financial standing and preparing for the future with confidence, not trepidation. Another myth crippling many: tax planning is too complicated for me. This perception often stems from jargon and complex forms, creating an illusion of insurmountable difficulty. But the core principles of avoiding a surprise bill are remarkably simple. They don't require an accounting degree, they demand basic organization and a willingness to learn. By demystifying the process, we uncover accessible strategies anyone can implement. Breaking down complex ideas into simple, actionable steps empowers individuals. It shows that financial control is within reach, fostering a sense of capability and building momentum towards greater financial independence. Simplicity is power. When it comes to taxes, breaking down the process reveals its inherent manageability. Instead of viewing the entire system as a monolithic beast, focus on core actions: track income, track expenses, estimate liabilities, and save accordingly. This approach eliminates overwhelm. Experts stress that consistent, small efforts yield significant long-term results. It's about building habits, not mastering every nuance of tax law. This demystification process is a liberating force, transforming daunting tasks into achievable goals. It empowers you to navigate your financial landscape with clarity, fostering a profound sense of accomplishment and future security. The journey to financial empowerment begins with early wins. These aren't grand gestures, they're small, consistent actions that build momentum. Starting a dedicated tax savings account, even with modest contributions, is one such victory. Recording every business expense, no matter how small, is another. These actions build habits, not just balances. They instill a sense of control and progress. Financial advisors highlight that consistent micro-habits lead to macro results. Each small step is a deliberate investment in your future self, paving the way for confidence and resilience against unexpected financial hurdles. Celebrate these early wins, for they lay the foundation for lasting change. Let's turn to Mike, a talented freelance web developer. For years, Mike treated his earnings like a regular salary, not realizing the significant tax implications of self-employment. He enjoyed the freedom but dreaded the tax bill. His initial approach was reactive, waiting until April 14th to scramble. This led to stressful nights, unexpected shortfalls, and a feeling of constant financial anxiety. Mike's story resonates with many self-employed individuals who face similar challenges. His experience underscores the vital need for a paradigm shift, from merely earning to strategically managing. His journey illustrates the profound difference active financial planning can make. Mike's primary misstep was ignoring quarterly estimated taxes. He believed that since he wasn't employed by a company, he didn't have income tax withheld. This left him with a massive, lump sum obligation at year-end, often resulting in penalties for underpayment. This common oversight, experts confirm, is a leading cause of surprise tax bills for independent contractors. Mike's story highlights a crucial lesson: self-employment demands self-withholding. Recognizing this, Mike began to understand the mechanics of proactive tax management. His realization paved the way for a more stable and less stressful financial future, an accessible goal for everyone. Mike's turning point arrived when a friend, a seasoned small business owner, suggested he consult a financial advisor. This decision marked a fundamental shift from isolation to informed action. The advisor didn't just explain quarterly taxes, they simplified the entire process, creating a custom plan. Mike realized that seeking professional guidance wasn't a sign of weakness but a testament to smart decision-making. This move empowered him to understand his obligations clearly. It transformed his financial anxiety into a sense of control, demonstrating that support and expertise are invaluable resources on the path to financial clarity. The first cornerstone of avoiding a surprise tax bill is meticulous income tracking. This means recording every dollar earned, from every source, as it comes in. Whether through a simple spreadsheet, a dedicated accounting app, or specialized software, consistency is key. This isn't just about knowing your total revenue, it's about understanding your cash flow and its tax implications in real time. Financial experts emphasize that accurate records are your best defense and your strongest offense. This proactive habit builds a clear financial picture, enabling you to forecast accurately and respond strategically, ensuring no income stream goes untaxed by accident. Meticulous tracking isn't merely an administrative task, it's a powerful tool for empowerment. It provides unparalleled visibility into your financial health. By seeing your income trends, you can anticipate peak earning periods and potential tax liabilities. This foresight allows you to allocate funds proactively, preventing last-minute scrambles. It equips you with data to make informed decisions about spending, saving, and investing. Experts agree that this level of transparency fosters a deep sense of control over your finances. It transforms abstract numbers into actionable insights, propelling you towards greater financial stability and confidence in your future. For many, especially the self-employed, mastering estimated payments is paramount. This involves calculating and paying your taxes in 4 installments throughout the year, rather than a single lump sum. The IRS sets specific due dates, typically in April, June, September, and January. Failing to meet these can result in penalties. But beyond compliance, this strategy is a financial superpower. It smooths out your cash flow, preventing large financial shocks. Financial advisors confirm that this regular engagement with your tax obligations fosters discipline and ensures funds are always available. It's a structured approach to peace of mind, empowering you to stay ahead. Embracing the rhythm of quarterly payments transforms your financial year. Instead of a mad dash, it becomes a predictable cadence. Each quarter, you assess your earnings, calculate your estimated tax, and make the payment. This routine instills financial discipline and eliminates the accumulation of a massive year-end bill. It's like tending to a garden regularly rather than trying to fix everything at once. This proactive management allows for adjustments, too. If your income fluctuates, your estimated payments can adapt. It's a dynamic system, empowering you to maintain control and navigate changes with confidence and ease. The benefits of regular estimated payments extend far beyond avoiding penalties. They include improved cash flow management, reduced stress, and greater financial foresight. By distributing your tax burden, you prevent large sums from impacting your operational budget or personal savings. This stability allows for better planning for other financial goals, like investments or emergency funds. Experts highlight that this habit fosters a stronger overall financial foundation. It shifts your mindset from reacting to planning, from dread to confidence. It's an investment in your future self, ensuring financial resilience and peace of mind year-round, not just at tax time. Now, let's meet Emily, the proprietor of a blossoming online artisanal craft store. As her business grew, so did her revenue and, unexpectedly, her tax obligations. Emily initially celebrated increased sales, but when a significant profit led to a staggering tax liability, she felt overwhelmed. Her previous, simpler tax strategy no longer sufficed. Emily's experience reflects the common growth pains of small businesses. It highlights how success, while desired, can introduce new financial complexities that require evolving strategies. Her story inspires, showing that adapting to growth is a powerful step toward sustained business prosperity and personal peace. Emily's challenge wasn't just higher income, it was overlooked deductions. She diligently tracked her sales but often forgot to categorize or save receipts for business expenses, from craft supplies to website hosting fees. These missed deductions meant she was paying taxes on a higher taxable income than necessary. This scenario is incredibly common among entrepreneurs focused on their craft. Experts emphasize that every legitimate business expense reduces your taxable income, putting money back in your pocket. Emily's journey illuminates the vital importance of understanding and leveraging these opportunities, transforming potential losses into significant savings. Emily's aha moment came during a financial workshop focused on small business tax strategies. She learned about common deductions she had completely missed: home office expenses, mileage for craft fairs, professional development courses, and even the cost of her packaging materials. Suddenly, tax planning felt less like a burden and more like a strategic game. She realized the proactive effort of recording expenses wasn't just busywork, it was a powerful mechanism for wealth preservation. This realization ignited her confidence, inspiring her to meticulously document everything. Her transformation underscores the profound impact of knowledge on financial well-being. Unlocking eligible deductions is a game-changer. This strategy involves actively identifying and documenting every legitimate expense that can reduce your taxable income. For freelancers, this might include home office costs, professional subscriptions, or marketing expenses. For small business owners, it could be equipment purchases, employee wages, or insurance premiums. The key is knowing what qualifies and maintaining meticulous records. Financial experts consistently advise that a small investment of time in tracking can yield significant tax savings. This proactive search for deductions transforms tax season from a cost center into an opportunity for strategic savings, empowering your financial growth. Meticulous record-keeping is not just a suggestion, it's a non-negotiable component of smart financial planning. It means keeping digital or physical copies of every invoice, receipt, and financial transaction related to your income and expenses. This documentation serves as your proof in case of an audit and as your guide for accurate tax filing. Experts universally agree that organized records save time, reduce stress, and prevent costly errors. This diligent habit transforms a potentially chaotic process into a streamlined operation. It empowers you with verifiable data, reinforcing your confidence and ensuring maximum financial accuracy. Another dangerous myth is, "I'll just figure it out later." Procrastination is the silent saboteur of financial well-being. Delaying tax planning, expense tracking, or savings until the last minute guarantees stress, increases the likelihood of errors, and often leads to missed opportunities for deductions or penalties. This reactive stance leaves you vulnerable to unforeseen circumstances. Financial planning, by its very nature, demands foresight and consistent engagement. Overcoming this myth requires a conscious decision to prioritize your financial health today, not tomorrow. This shift empowers you to build resilience and proactive financial strategies, securing your future. The cost of procrastination is quantifiable: financial penalties, lost deductions, and immense stress. Forgetting to set aside funds means scrambling for money. Missing quarterly payment deadlines leads to fines. Neglecting to track expenses results in paying more tax than necessary. This reactive cycle is financially draining and emotionally exhausting. Financial experts confirm that a small, consistent effort throughout the year far outweighs the scramble of last-minute panic. The true cost isn't just monetary, it's the lost peace of mind, the forfeited control over your earnings. Break the cycle now, and invest in your tranquility and prosperity. A dedicated tax savings account is a powerful, yet simple, strategy for financial stability. This isn't just any savings account, it's one specifically earmarked for future tax obligations. Each time you earn income, transfer a predetermined percentage directly into this account. Financial advisors often recommend setting aside 20 to 35% of gross income, depending on your tax bracket and state laws. This systematic approach ensures funds are always available when tax payments are due, eliminating stress and preventing shortfalls. It transforms the act of paying taxes from a burden into a seamless, automated process, liberating your financial mindset. Building a dedicated tax buffer account provides more than just funds, it offers profound peace of mind. Knowing that your tax liability is already covered, set aside and untouched, frees you from anxiety. It creates a robust financial safety net, protecting your operational capital and personal savings from unexpected tax demands. This proactive planning builds resilience into your financial structure. Experts emphasize that this buffer enables you to weather financial fluctuations with confidence, focusing on growth instead of worry. It's a strategic move, allowing you to breathe easier and maintain control over your financial destiny, year after year. For those with complex financial situations, expert insight from a qualified tax professional or financial advisor is invaluable. They navigate intricate tax codes, identify obscure deductions, and provide personalized strategies. While seemingly an expense, professional guidance often pays for itself through savings and error prevention. It removes the guesswork and provides tailored advice specific to your unique circumstances. Experts agree that a good advisor empowers you with knowledge and a clear plan, transforming tax season from a dreaded event into a strategic opportunity. It's an investment in your financial clarity and long-term prosperity. Recognizing when to seek professional help is a sign of financial maturity, not weakness. If your income sources are diverse, if you own a growing business, if you've experienced significant life changes like marriage or home ownership, or if you simply feel overwhelmed, it's time to consult an expert. Don't wait until confusion turns into crisis. Proactive consultation can prevent costly mistakes and uncover beneficial strategies you might miss. Financial experts advocate for early engagement, transforming potential problems into opportunities for optimized financial outcomes. This decision empowers you to build a stronger, more secure financial future. The most profound transformation in avoiding a surprise tax bill is the mental shift, moving from fear to control. No longer a looming monster, taxes become a manageable component of your financial life. This shift brings a sense of empowerment, reducing anxiety and increasing confidence. It liberates mental energy previously consumed by worry, allowing you to focus on growth and aspirations. Financial psychology confirms that perceived control significantly impacts overall well-being. By implementing these strategies, you actively take charge, reclaiming your power and shaping a financial future defined by intention, not by dread. This is true financial freedom. Remember Sarah, the graphic designer initially blindsided by her tax bill? After implementing meticulous income tracking, setting up a dedicated tax savings account, and understanding her quarterly obligations, her story completely changed. She no longer dreads April. Her quarterly payments are automated, and her records are organized. Sarah now feels a deep sense of calm and competence. She even identifies new deductions with ease. Her transformation is a testament to the power of proactive financial habits. She mastered the art of managing her earnings, proving that anyone can overcome initial struggles and build lasting financial confidence. Sarah's newfound confidence permeates every aspect of her life. She tackles new freelance projects without the underlying worry of future tax burdens. She invests in new skills, knowing her finances are in order. Her creativity flourishes, unburdened by financial stress. This isn't just about taxes, it's about unlocking potential. Her experience proves that taking control of your financial responsibilities frees up mental space for personal and professional growth. This empowerment translates into better decisions, bolder moves, and a profound sense of self-reliance, inspiring all of us to pursue our aspirations without reservation. The ripple effect of avoiding surprise tax bills extends far beyond financial accounts. It fosters discipline, boosts self-esteem, and cultivates a deeper understanding of your financial ecosystem. This improved financial literacy empowers you in other areas, from budgeting to investing. You become a more informed consumer, a more strategic saver. Experts emphasize that this holistic approach to money management creates a positive feedback loop, leading to greater overall life satisfaction. It's about building a foundation of financial well-being that supports all your aspirations, transforming your relationship with money from one of apprehension to one of mastery. Your financial future is not a predetermined fate, it's a path you actively forge. Avoiding surprise tax bills is a critical step on this journey. It's about choosing awareness over ignorance, proactive planning over reactive panic. Each small step, tracking income, setting aside funds, understanding deductions, builds momentum towards a future where you are in control. Financial empowerment is not an elusive goal, it's a series of deliberate choices, accessible to everyone. Embrace these strategies, and embark on a path where your financial life is a source of strength, not stress. Your potential for stability is boundless. Today, you hold the power to change your financial trajectory. The strategies we've discussed are not secrets, they are accessible tools waiting for your activation. Start small, stay consistent, and seek help when needed. Remember Sarah, Mike, and Emily, their transformations are your blueprint. By demystifying taxes, embracing proactive habits, and understanding that financial control is within reach, you can eliminate the dreaded surprise bill. Step into your financial power. It's not just about avoiding a bill, it's about building a foundation of confidence, freedom, and lasting peace of mind. Your journey to financial mastery begins now.